U.S. economy might not be in a recession, but for millions of Americans, it sure feels like one. While the headlines talk about growth, jobs, and record corporate profits, there's another story unfolding beneath the surface, one that's being called a K-shaped economy. And according to economist Mohamed El-Erian, the lower half of that K is already nearing a breaking point. So what exactly is a K-shaped economy? It's when some parts of society recover and thrive, while others continue to fall behind. Since the pandemic, wealthy Americans and large corporations have seen their income and investments soar. Meanwhile, lower-income households are facing higher prices, shrinking savings, and job insecurity. In an interview at Yahoo Finance's Invest Conference, El-Erian, chief economic advisor at Allianz, said this economic split is becoming impossible to ignore. "What does keep me up at night," he said, "is what's happening at the lower ends of the income distribution, where there is significant pressure." He stopped short of declaring a recession, but his warning was clear. For lower earners, it's starting to feel like one. Here's why. During the pandemic, the government poured money into the economy. Stimulus checks, enhanced unemployment benefits, and wage growth from a strong job market. That support kept spending alive. But now inflation is still sitting around 3%, and those financial cushions are gone. Prices are high, wages are slowing, and the cost of living continues to rise faster than incomes for millions of working families. And the data isn't comforting. Private sector reports show a troubling picture, even as official government data remains delayed due to the Washington shutdown. Last week, a report from Challenger, Gray and Christmas revealed that U.S. employers cut over 150,000 jobs in October, the highest monthly total in more than 20 years. That's up nearly 183% from September. Meanwhile, payroll processor ADP reported just 42,000 new jobs, far below what's needed to keep up with population growth. For everyday Americans, the squeeze is real. Savings from the pandemic are drying up, credit card debt is at record highs, and more households are missing payments on auto loans and utilities. El-Erian warned that if this continues, the pain at the bottom could contaminate upwards, meaning that when low-income consumers stop spending, the effects ripple through the rest of the economy. It's a stark reminder that while the stock market might look healthy, the foundation beneath it, ordinary consumer spending, is beginning to crack. So while there's no official recession on paper, for millions of families struggling to keep up with rent, groceries, and bills, it's already here. The top half of the K may still be rising, but the lower half is slipping fast. And if that continues, it could pull the entire economy down with it. Drop your thoughts in the comments and don't forget to like, subscribe, and hit the bell for more quick market breakdowns.